Today's a good day to talk about because we had a gap up at the open and we traded lower all day. So I remember whenever I used to hate trading gaps because they'd gap up and I would try to play a gap and go and it would go against me, and I try to fade it and it'd gap and go. It took me a while to really, until it just finally snapped. I had to really look for these to play out. So now what I do, and this may not work for everybody, doesn't work for me necessarily every time, but whenever we do have a gap up situation, I wait until I see some weakness in the market, and that way I can kind of judge what's going on. If the market opens up and it just starts to go, I just let it go generally without me. I may try a stab, but I don't let it go against me. I don't take much risk on the trade. But what I'd like to see is I would like to see a trade lower. And I like to see either buyers step in pretty strong and get a sharp reaction, or to trade lower and just nothing happen, no volume coming, it just kind of dies out and there's no interest in selling below the open. And when I was writing the newsletter this morning, a couple hours before the open, I was talking about that it was a mild risk on. And it was a mild risk on because we were gapping up. And that was before we got to the call wall. It was before we really got the reaction that we did from, you see we got a pretty strong risk on reaction from gold, from crude, yields, bonds up. But whenever you look at the equities, we have ES on the top here, and they all look the same pretty much. We had the gap up at the futures open, and then it just pretty much traded sideways the rest of the session. It was decent volume, but there was nobody else really stepping into those prices. And so when we look at, this is today's profile here. This is our overnight session. And so we had this big gap right here from Friday's high day to the overnight low, and then where we'd opened up. A little difficult to see here, but it's kind of hidden behind here. So it was just kind of a mild risk on, so wasn't really looking for a super strong reaction at the open. But we talked about on the open, we're really close to the call wall, and we didn't want to put a lot of risk on long right below the call wall. We want to make sure that we're able to get risk off. And I think it was 11/21, November 21st or something, we were looking for this as a swing target, and we pretty much got there in the overnight session. And it's okay to take some risk off there and to reinitiate above if it looks good, if you get a good test of that. And so our call wall's right up here, about 6020, which is 6,000 on SPX, so a huge level. And then above that, we're targeting the all-time highs and the Globex, the regular session and the Globex all-time highs. One of the things we're keeping in mind is that we have PCE on Wednesday, and that's a pretty big release. And whenever we get to a big level, like call wall, then we very often see a pullback from that level. So in our first scenario, 6121 is a call wall major, and our swing target for the write up. Expect to be a good place to take risk off. Above 21, look for acceptance. Want to see a clean break higher and volume come in. Next target above was the 6028. So we got that 6028 level, and then 34 to 36 was our target for this scenario. So we broke that by a little bit, made basically 20 points above the open before seeing that weakness come in. And so I talked about this. This is one of the things that, in my opinion, I think is maybe the hardest for new traders, is these sort of situations where you have a gap up. You've been moving up for several days. I think we're one time framing up 3 days in a row or something. Most people are talking about all-time highs again, SPX 7,000, things of that nature. And you see this gap up and people want to be long. But this very often happens. So this is where you open up, you put in higher value on the day, but you trade lower all day long. That's what happened here. So we still have higher value above Friday's value. So that's a bullish outcome, but it was a bearish way to get there, right? And so those are often very difficult days. And so we had basically scenario one play out, and then scenario two, choppy rotational trade, higher, overlapping to higher value. Call wall is often an area where we see a pullback, especially before big releases. I just mentioned that. Below the overnight low, 6,005, we could see some liquidation of overnight longs. And so this is our 6,005 level here, which we worked it a couple times before breaking through that. I talked about this on Twitter, below 05. we see 6,000, and then, as we see here, 6,000 half gap, and we're looking at 59.93 fills a gap and cleans up this poor high from Friday. So that's, you can mark that checkbox off. This is also the weekly high from the previous week. We found support there, closed higher up above this gap. 85.87 was our line in the longs for our line in the sand for the longs. That's where we found support there. So the write-up worked very well. The scenarios worked very well. The plan was great. The main thing that's important for me is reading the market well. I say this all the time, reading the market well. We're going into tomorrow. It's a holiday week, so we're not expecting to see a ton of liquidity, a very thick book. We had pretty decent volume and pretty good range, especially for being up in positive gamma like this. But the book was very, how do I put it, algo-y. There wasn't a lot of top of the book liquidity, and so the bid ask was jumping around a lot. I took a long at the open, and then I took short whenever we broke back through that, and then I was done in the first probably 20 minutes, 30 minutes of the day. I don't know. And then I didn't really want to trade that anymore because of the way that the book was. And it's a little harder to manage trades with tight risk, which I like to do if it's jumping around, 4 ticks, 8 ticks. So tomorrow we don't have a whole lot of catalyst. We have a lot of catalysts. We don't have a lot of major catalysts, especially whenever you put into perspective that we have PCE. We do have the FOMC minutes, but those guys have not been quiet, so I don't think there's going to be anything new there. They want to see PCE. They want to see those numbers, but we also have some consumer confidence numbers, home sale numbers, things of that nature. For earnings before the open, don't have much. After the open, Workday, Crowd, Dell. So a few, medium names there. And, kind of the big target is Wednesday. And that ought to be pretty wild with PCE on the day before Thanksgiving, when liquidity should be even thinner. That could be a pretty crazy day to trade, and one that I might just sit out, to be honest with you. So that's it for today's analysis on the newsletter and everything else. We'll look at this in the morning and see where we open up. If we're still below that call wall, then I think very likely we might see more balance. If we can get back above that call wall and find buyers up there, then we're looking for all-time highs and Globex all-time highs. So that's it. Hope everyone has a good night, and we will see you all in the morning.